Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're taking a look here at Bitcoin, seeing what's going on. And just before we get started, I want to make sure to let you know that we do have a Fed meeting here today. So it's really important for you to kind of maybe stay on the sidelines until that is done and over with, because there's typically a lot of volatility during that time frame. And then typically a decisive direction is chosen. But once again, the price is likely kind of priced in, for lack of better terms, right? So I think we're going to be in a position where we may not see a tremendous amount, but it's probably still important to kind of stay on the sidelines and wait. Okay, so please be careful here today during that time frame. So that being said, I'm not a financial advisor. Love to teach people to trade. Hope you can learn something here today. We're going to take a look at some big picture stuff here. Actually, we're going to talk about the weekly just really quick here. Of course, make sure to preface with some important information regarding this ascending trend, as well as, of course, high block capital. Let's go ahead and get this moving forward here and kind of take a look and kind of just help recognize some big picture things here, right? Because again, the big picture is oftentimes the most important thing to look at. And when it comes to trading, you kind of want to work your way down, right? One last thing too as well, make sure that you take advantage of this exclusive offer here from BingX. July 31st is the end date effectively for this benefit. You get a $100 bonus and $50 bonus with a $50 deposit and $3,000 in volume. So pretty simple to be able to get that. Be sure to check that out. And I'd just like to mention that because a lot of my members, subscribers, everyone was really impacted because we are, majority of us are in the US or Canada, and a lot of us essentially had no way to KYC with Bybit, BitGet, and KuCoin. So just keep in mind, you still have an option here, of course, with BingX. They are a fantastic exchange. Highly recommend them. So let's talk about the weekly first, and we're going to check out high block capital here in a second. So in the big picture here, we are seeing this ascending trend. It's running fairly concurrent with the 20-day set moving average. So if you've watched my videos at all, you'll know that the 20-day set moving average on most time frames is kind of the initial trend setter. In other words, it'll tell you when there's a trend forming. Okay, so if we take a quick look at that, we can see, of course, this is the trend here for a while, has been higher lows, and so far, we're looking pretty good there. Okay, so we've seen two tests of this support level there, and we're going to see a third one potentially here soon. What do you know? 28,500 is right where that level's at. Now, it's not to say the price action won't go down below that. Okay? It's not a foolproof, like just line in the sand. Price will never pass that level. But we can extract here that with us making higher lows here on the weekly, with this ascending trend forming positively, that there's a good chance it'll continue to hold and continue to move upwards. Okay. Once again, we'll probably have to come down first before we come up. If we can see here, we got a MACD divergence here forming as well. Once again, they don't have to last very long, but it could essentially happen. Okay, so just be mindful that we very well could see the price action come lower. It seems to make a little more sense than it is for the price just to shoot up right now. Okay, because again, every increase is followed by a previous decrease. Okay, so again, a lot of little things you can kind of think about there, but generally speaking, that's where we're at here for the weekly. All right, so let's go ahead and jump on over to high block capital and kind of see what's going on. We can see here, let's go ahead and move on over to the daily. Kind of make things a little easier. Once again, we know we had a lot of liquidations day before yesterday, or essentially on Monday, right? Monday was a terrible day. So far, we're looking pretty good here in the overall sense of things, and not a lot going on. Obviously, when you're range bound, you're going to see a lot less in liquidations. But generally speaking, it's fairly quiet today compared to previous time frames when we've had those kind of situations as well. So again, is this the calm before the storm? Hard to say, but just know that's kind of where we're at. If we take a look here at open positions here for longs, we can see more longs are opening, and the same thing with shorts as well. We're seeing more shorts open too. So it's kind of conflicting information in a weird way, but it's also just kind of telling us that it's a point of contention, and a lot of folks want to go up and down at this level. If we take a look at the longs here, let's go ahead and take a look at long positions here. We can kind of see that there's a lot of longs leveraged here at the 29,000, roughly 200. Okay, so 29.2 is essentially where a majority of the longs are holding. Okay, they're hedged out right there. Once again, you can kind of see that in the price action, that 29.2 is a pretty strong level. Same thing as well here, right around 29,300-ish, that we got some shorts, but shorts are starting to get liquidated more as the price keeps waking up and effectively closing them out. Like yesterday, we went up to 29,400 and essentially cause that kind of price action to respond adversely for the shorts, right? So again, you see these little wicks here, those are kind of stopping the shorts out. The thing we want to recognize though on the time frame here, or just more so the Fibonacci retracement levels, is that we have a pretty definitive 29,400 as a resistance and 29.6 as a secondary. So as I mentioned before, we have that fair value gap up to about 29.6. There's a good chance the price action will come up to that level and then reject out. Okay. Now, it may not come up to that level, but the bottom line here is I think that the overall sentiment is that the price should come down. But we're going to see here soon, of course, if that's even the case. It'd be sweet if we had a nice little rally, but we do got to recognize that if you look at the price action here, there's a lot of price action right here at this level here, roughly the 29,700 range, where you can see the price action continued to retest that level and eventually broke. Okay, so again, that's usually what happens for the most part. You retest any type of support or resistance continuously, it will eventually break through to whichever direction it's heading. Okay. So again, no surprises coming down here. We're not surprised, really. It would have been nice to have one last little rally up to fill that fair value gap at what, 30,600? But again, that'll have to get filled later. Just an inevitability. It may even get filled here soon. We'll see. Obviously, we have to have a lot of volume to break through this level, but there's potential for it. So let's talk about the daily and kind of see what's going on here. So with the daily, first and foremost, we need to recognize a few things here. We are treading water above the 50-day SIP moving average. That's mostly positive. But again, not a definitive breaker, I guess you will, or not something that's going to be like, okay, we're above this level, we're good. It is important that we maintain above that, but if we lose it, it's not going to be the end of the world. But that is just kind of a little bit of a saving grace here. But I really don't think that that's going to be, the one thing to kind of push the price action back up, right? It helps, though, but just know we lose that. We do have the more important 200-day SIP moving average here, which is once again running fairly concurrent with the 50 on the weekly, basically just telling us here that we got this strong support level here. It's running concurrent with the ascending trend, and that's a very positive sign. Okay, so to me, being above the 200 is the most important. Ever since we've been above it, you can see this nice little bounce off of it. We haven't come back to retest it yet. Okay? So if we do retest it, then I think there's a good chance we're going to continue upwards from there. But again, the 200 is a pretty important level there to pay attention to. We take a look at the RSI, we can see the RSI is coming back down. Big surprise, we lost 50 on the RSI, so we are technically bearish in this overall sentiment here. And just to kind of note as far as bearishness is concerned, because if we take a look at, just say we take a look at just RSI alone, you can see when the price action is above 50 on the RSI, it does fairly well for itself. So we've been up above for the last 5 weeks up until just a couple of days ago. And beforehand, if you see, it was down below for almost a full 3 or 4 weeks. Okay? So I'm not saying we're going to have another 4 to 5 weeks of bearish continuation underneath 50 on the RSI, but I am saying that is a possibility, because you can kind of see these trends, right? You got this break here, and this one here. Each one of them are almost a full month to 5 weeks, 4 to 5 weeks in length, almost every single time. Now, again, that doesn't exactly reflect on the charts that is bullish or bearish, because we broke down below 50 here a few times, and the price action was technically above the previous weeks as far as profit is concerned, or just the price action. But what I'm getting at is, for the most part, we can kind of assume, based on that sentiment, that we are fairly well bearish in this sense, and that it's going to take a pretty decent push above 30,000 to get us back on track. Okay, so again, I think as long as we remain under 30,000, it's safe to presume that the price will have difficulty not only getting above, but it'll probably stay down for another few weeks. So my anticipation is that we may see this 200-day SIP moving average of inevitably hit, where the price goes sideways and then bounces off of it. That would put us at roughly a month from now. Okay. Again, just some potential things and scenarios to think about. But generally speaking, we have some positivity here. For right now, we're above the 50. Ultimately, we're above the 200, and those are some supporting factors here right now. Okay. Taking a quick look here, let's see if TD sequential tells us anything. We came down to a 9, got that little reset. We're down to a 3 now, so we're 3 days of bearish continuation here. If we continue upwards, we'll get a little reset, so that won't matter too much, but it is something to note that we were overextended leading into this drop. Okay. So again, if you get overextended in one direction and it continues that same direction, the more likelihood it's going to recover based on the fact that it's pushing too far in that one way. So taking a look at the 4 hour here, we're below all 3 moving averages. Never a great sign, but we are testing the 50 here today. You can see we got rejected off of that just roughly a few hours ago here when this candlestick opened. So generally speaking, that is working as a resistance. We can also see here as well with the current price action, we're below 50 on the RSI. Big surprise. And that's usually a very similar circumstance here on the 4 hour, where oftentimes you'll see that the price action will stay above or below 50 for maybe a week or two. In this case, we've been below 50 on the RSI for some time, ever since July 14th. So it's been about 2 weeks now, roughly. We do have a convergence on the MACD here as well, though. This is kind of, I wouldn't say conflicting, but it's telling us that it wants to shift bullish. And what I mean by bullish is just in the most recent past here, the most relevant recent past, we're looking better now than we were yesterday. Okay, so again, please keep in mind, do not be one of those folks that just goes long because you see a MACD convergence in the 4-hour. It's a very it's a new mistake. It's something new traders make the mistake of. While it's a very, very good indicator and letting us know on the 4-hour time frame, probably the most important time frame to use it, it's still, if you factor everything else in, we're still moving down. At least the general consensus is down. We have yet to make a higher high, and we are consistently making lower lows. Okay, so you can see this trend, it just keeps going down. So until it stops, we got to expect it to continue. That's kind of just how trend lines work, all right? So again, just know we're in a position right now where even though we are converging on the MACD positively, it doesn't imply that we're just going to explode and continue higher. Okay? Now, manipulation happens all the time in the market. So truth is, somebody with billions of dollars will effectively do that. In fact, this drop right here, this guy right there, that was what, almost, it was like $890 million in what, under like 5 minutes. So yeah, you can't really truly anticipate that. Okay, so again, a lot of money is moving, and unfortunately when that happens, you can't expect it. But right now, generally, the price action is moving down, right? That's the thing we need to walk away from here, understanding that we're truly on the bearish side of things here. And the cloud also kind of confirms that for us too. We got this massive cloud, which is less common, of course, it's because the price action dropped so aggressively, but simply put, we're within the cloud right now. So unless we can close at this same price point tomorrow, there's a good chance we'll expect the price to come down. Okay, so between now and tomorrow, I would say it's more likely for the price to drop because of this. This really is telling us here that we have no reason to take a long position. Okay. So if you do take a long position, just keep in mind tight profit targets. I would recommend target about 29,400, 29,550, just below these Fibonacci levels to ensure that you get filled, you get in and out quickly, and try not to hold a position for too long, because it just seems like overall right now the sentiment is the price action is probably going to come down before it comes up. Okay, so that's generally where we're at there. All in all, not the worst thing ever, but it is what it is, right? So again, if it benefits you, then take the trade. But I'd recommend waiting until the meeting here today is done, right? The Fed meeting always causes some significant volatility, depending on the basis points. So just make sure to be careful with that. Again, all this stuff is available on our Twitter if you want to kind of stay familiar with those events. We're going to be able to have that available here for you. So keep that in mind. Really cool stuff here on the Twitter. So be sure to check that out. Greatly appreciate helping us grow that community as well. It's wonderful to be able to interact and communicate with our members that way. All right, well, I hope you have a good rest of your day. Thanks again so much for your time. See you in tomorrow's video. Take care.